It's time we did something different. Apparently there's new personal finance gurus on TikTok serving advice that at best deserves a second thought, but that's just the start of it because while digging through the rabbit hole of online finance gurus, I found a few clips that are perfect tangents to talk about their ideas with much more depth and substance, so that's exactly what I've decided to do. Keep in mind this isn't financial advice, but subscribe to the channel for more discussions like this, and let's get into it.
If you could borrow $1 billion, 0% interest for 10 years, would you do it?
No.
No?
Why?
Easy question?
No question.
Even though you could put it in treasuries and pay it off after the 10 years. You could lock in 10-year treasury right now, 10% or 5%.
No.
It's not worth it.
No. I don't borrow money.
Dave Ramsey's aversion to debt is perhaps driven by a degree of fear because he faced bankruptcy in the 1980s in the real estate sector. I say that because it's hard to imagine any other reason why someone would say no to a hypothetical offer like this. Here's the deal. Inflation rates in the United States and across the world factor in one important thing, even before they think about the lender's profit, and that's the rate of inflation. The US has averaged currency inflation over around 3% over the last 10 years and 2.2% in the last 20 years, with large rises in 2 years after lockdown. You know what that means? Getting $1 billion for 10 years at 0% interest means making nearly $300 million for free, even if you did absolutely nothing with that money. That's because you'd not be paying for the fall in purchasing power of that money at the end of those 10 years since there's no interest, and of course that's not even considering the fact that any safe and conservative investment can far outstrip that figure, even if you put it in an index fund like the S&P 500, which averages an annual return of 8 to 10%. So I'm not really sure whether Dave Ramsey's extreme disdain for debt is really driven by sound financial advice or just a fear of owing debt. Whatever the case may be, he's likely saying no to at least $100 million plus over the course of those 10 years, but perhaps that's just his school of thought.
So my idea was you give every baby that's born in America a $7,000 account when they're born. They can't remove money from that account, and it's tax exempt, and it compounds, and it gets invested in like an index fund. By the time you're 65, it's $1 million. By the way, that would cost $20 billion a year to do that. Just take the number of babies times whatever, $7,000 or $8,000. It's like a nothing thing. It would start to give everyone in this country a piece of the success of the country. So I think we need these sort of savings accounts, and we can't wait until people start creating an IRA or 401k by the time they're, 25 or 30 or 35. You want to start when they're a baby, just because the laws of compounding. That extra 25 years is very, very material.
Sounds like such a solid idea at first glance, but it's hard to believe an established hedge fund manager like Bill Ackman would actually think it's good. For one, waiting 65 years to reach $1 million doesn't sound all that enticing anyway, given how fast the world of money is moving. Plus, imagine the market volatility and rapid inflation, the movement that a new crop of people retires and gets $1 million. It would massively reduce the purchasing power of those $1 million, rendering the entire concept redundant. Nobody can predict the state of the world or the economy 6 decades from now to be able to trust that process over a lifetime. Perhaps that's an interesting tangent to discuss the efficiency of a traditional retirement account in the future, as the work style of the 9-to-5 and 40 years in the same industry starts to become disrupted with new technologies and state of economy, but that's a debate for another day.
Here's how to invest in real estate like a pro. This is the beginner's guide to real estate investing in 9 steps. But the thing is, we're not going to be buying any properties. Instead, we're going to follow this real estate hack that not many people know about to make $2,500 a month in cash flow from each property. So first, you want to set up an LLC. You can go on a site like LegalZoom.com to do this. Then you're going to find a property listed for rent in a good area. Next, go pitch the landlord to let you sublease their property so you can launch it on Airbnb, and you can even throw in an extra $50 to $100 a month in rent. Go and order furniture from websites like Wayfair, Amazon, and Target and send it directly to the property. Fifth, hire a handyman to go and set up the furniture once it all arrives. Then you're going to hire a cleaner that specializes in short-term rentals to go and clean the property. Once you do this, hire a professional photographer. Please don't skip out on this. This is really important. Go and create an account on Airbnb, set up your property management and pricing software, and then finally launch it and start making money.
I don't get it. That's not exactly investing in real estate. That's just starting an Airbnb business. And even for that, building a short-term rental business through subleasing is a lot more risky than it sounds. It's not just that you'd be vetting your guests all the time and be responsible if anything goes wrong, but also the fact that many states just don't allow subleasing from a landlord anymore for short-term rentals. Scale that out to several houses or apartments, and those individual problems with guests and tenants just start to compound. So if anything, it's not really a beginner's guide anyway. Dave Ramsey's also not a great fan of managing large-scale rental properties for partly those reasons.
I've owned over 2,000 pieces of real estate in my life. I've got several $100 million worth of real estate today. One thing I know for sure is if you tell me the renters are going to pay the payments for you, that tells me you've never managed rental property. That tells me you've never done it. That's 100%. You are a novice at best, an idiot at worst. And I mean, that's the truth, because anybody who's ever had a renter or been a renter, and I have both, I've been a renter too, it knows that sometimes renters don't pay. Sometimes there's cancer. Sometimes there's car wrecks and job loss. Sometimes there's a pandemic. Sometimes ... It's, as if there's a perfect stream of every month the rent is going to come on time or early and you can pay your stupid little payment. And that's the most ridiculous assumption, which indicates a lack of experience or knowledge of how rental property really works.
I think that ties into something else as well, which is kind of unhealthy obsession in young people for getting to a point of passive income. The truth is no income is completely passive, not even rent. Building a passive income requires years or decades of active income first. In order to set up elaborate systems in place that generate cash flow every month, it might be good to rent out a house you own to a long-term tenant that you vetted, but the more that you try to scale that into a business after borrowing debt to build it, the more headache you make for yourself.
My idea for making $1 million is just margin flipping. So you can margin flip anything. In fact, that's what people do when they flip houses. It's like, all right, I bought a house for $400,000. I can put some equity into it, or I can put some sweat into it, whatever it is, and that house could be worth $600,000. The cleanest margin flip in real estate is reassigning. You effectively find a property that is undervalued. Maybe it's at $800,000. You know someone will pay $1 million for that property. You can assign that and flip that margin. Find something for $9 million that's actually worth $10 million.
Yep.
Buy it for 9, sell it for 10. That's a quick way to make $1 million.
That's it? He makes such a simple idea so complicated and yet misses out the most important detail. Finding a property for as much as 10% lower than its market value is extremely rare, and most likely such a property would require a lot of money to renovate before its price can be increased to make that flip. Margin flipping isn't as simple as buying something for low and selling it for high, especially when the difference he talks about is of $1 million as if no one's going to notice. That just strikes me as a short-term way to make some money, but short-term money is also short-lasting money, and margin flipping properties that way has a cap where the market pulls you back down to its actual worth regardless. Perhaps the most that advice could do is start to jog the mind of someone to first start getting interested in those businesses and ideas before realizing they hardly work and moving on to something more practical. But let me know in the comments if you agree, because it's certainly worth vetting and verifying a lot of this financial advice floating around online.